Well, hello and welcome to the Stock Planner channel. Today, I'd like to talk about what to do if the stock market crashes. I know the stock market only goes up. It's never going to go down. But just in case it does, being a swing trader does take advantage of both the upward movements of the stock and the downward movements of the stock. So I'd like to give a high-level view of what to do if the stock market starts tanking. And because it's a high-level view, it's focused on a beginner. So let's get started. Before we get started, I want to remind you that we're an education channel. We're trying to share ideas. This is just one of those ideas. I'm not making any recommendations, but you really ought to learn how to do this, do your own due diligence, and win. So if the market is going up, you know what to do. You buy the stock. But when you're here and the market starts going down and crashing, do you stay in and wait for it to come back around? Or do you get out of your trade, which is what you should do, and short that stock? Well, you certainly don't want to buy because you don't know. A lot of people think, oh, it's going down, I'll buy a bargain. The problem is you don't know when it's going to stop. Let's take a little example. We're swing traders, and the job of a swing trader is to capture these swings. This is NEO on the daily time frame. Swing traders tend to trade on time frames that are larger than the hourly, or 2 hour or 4 hour. They usually go for daily and weekly and monthly. And you see the daily, if you capture this swing, you would have made some serious bank. But on a downward slide, you would tend to think that you could buy there and here and here and here, which you could have. So where it stops, you don't know. Now, granted, you could capture these smaller swings if you knew how to get out. That's why I have this. By the way, this is the zigzag. It's a major. That's a major, and this is a secondary, minor. And you can trade with both of them, but you can't trade on the zigzag indicator. You have to use other indicators. And I used the zero lag MACD, the stochastic RSI, and the RSI. And I look for this kind of stuff on the RSI. Hopefully, I can find some correlation. Here's one to go up, and it did. Here's one that would have caught that minor one. This was caught this other minor one, and that would have caught this one. So I use RSI, the stochastic RSI, and the MACD. You cannot use the zigzag because it repaints itself based on new information. It's always a perfect indicator. You can't use it, but you can use these other indicators as all indicators to help predict these swings. Because that's what we're trying to do. We're trying to predict the tops and bottoms and then capture the trend in between. That's what a swing trader does. And now we're sitting here. The zigzag does not know what it's doing. We think it's going to go down. The MACD says it's going down. We have a crossover here of the stochastic says it's going down. And we have a crossover here of the RSI says it's going down. All three indicators occurring at the same time is a good sign. Zigzag not knowing what it's doing, that's when we like to take out, we kind of feel that it's going to be a regime change. If we're in this trend, we get out and maybe enter the other trend. If you think the overall strategy, the overall market is going down, which we do, this market is going down, NEO is the stock of the future. It's a China EV company, electrical vehicle company. It has a novel concept. At the end of this decade, this is going to be up. But for the short term, with China having some supply issues, chip issues, the economy, it's looking like this stock has a little bit more way to travel. In other words, I'm asking myself, was it going to get here first or here? This is the Fibonacci. I use that as well. So knowing how to short a stock and stay in the trade is going to make it be profitable. Trying to buy and hold, you would have, if you bought here, and had held, you would have lost for a while. Now you could have redeemed some of it, but buying in a dropping market is not the way to go. You have to wait till the overall prevailing trend switches. And I don't think for NEO it has switched yet. What do you think? Please let your comments below and let me know if this is a downer or an upper. I'm going to tell you, if you ask the internet, they're going to say it's going to the moon. So buying in a dropping market, you never know when it's going to be over, when the bottom has hit. The last few years, the stock market has done nothing but go up. But to be a successful swing trader, you need to be able to play the game in any kind of market, sideways, up, down. And if you learn these skills and practice them and plan for them and master them, you can be a winner for life. This skill, being a swing trader, is something you can carry on and do as an old person. So, as I just showed you, I used 3 indicators: the RSI, the MACD, and the stochastic RSI. And when all 3 of them occur within each other, it doesn't have to though, because I rely primarily on the RSI. I wake up and look at the trade. I don't always take them. Let me give you another example. This is Caterpillar on the daily time frame, and you can see generally it swings very nicely. Look at that. I like Caterpillar and John Deere, Johnson & Johnson. They swing nicely because they're nice steady stocks. And you can see that if you took the prevailing trend, which is down, and only took the down trades, you would have been a really nice winner and had several trades over the last few months. But first of all, you had to recognize that prevailing trend. So let's scope out and go to the weekly time frame, and you can see it much easier. Look, you had a long trend up, and now the prevailing trend seems to be down. On the weekly, the zigzag doesn't know what it's doing, and the zero lag MACD is below the zero. That's key. The stochastics and the RSI all crossed over. That was a key to go up. This is a weekly now though, and the right here, and the zigzag is saying it doesn't know what it's doing. So on the weekly, it says it should go up, but I'm telling you, I'm looking at this prevailing trend, and this stuff, it still looks like it's going down. And I believe in the 50% retracement, which 50% retracement is right about there. So I don't know about Caterpillar. I think the prevailing trend is still down. And I generally I looked at the weekly to try to get that prevailing trend. So use your own judgment, do your own due diligence. Is prevailing trend up or down for Caterpillar? Now you have to ask yourself a couple other questions though. Swing trading is primarily technical, but what's happening with China? China has a supply problem, an energy problem. Their economy and housing boom is maybe busting. We have the Evergrande situation. So, and China buys a lot of Caterpillar. So is that good? You have to ask yourself, do you see it improving or disapproving? Also, Caterpillar has some strikes, issues, some labor problems. So, I don't know. All those things are factor in here. And I'm going to switch back to the daily. So it looks a little different on the daily. I still see a prevailing trend in a downward motion. We got earnings here in the next day or two. We'll see. That's going to affect it a lot. I have a feeling that earnings are going to be good, but I have a feeling the stock was still going to continue down, is what I think. And what I do sometimes plan up my trade out anywhere from 2 days to through and 3 months. And if I was going to do a short on Caterpillar, I'd plan it out for the next 2 to 3 months because I think the economy is not going to rock. I'm not seeing good out of it other than the Fed buying stocks and propelling the tech stocks to go up, reaching their all-time highs, which causes the S&P and the Dow to reach its all-time highs. 3 indicators, MACD, stochastics, and the RSI, and they work in any time frame. I have a link in the description below on how I set those indicators up. So the short term, as a swing trader, you have an advantage. You can go long or you can go short. Very neat. And you can take advantage of both sides of the market. If you're a long-term investor, you're primarily buying and holding, and you're going to suffer some if you don't get out of that market. And long-term traders tend to hold and wait for it to come back around. And if it's a long-term crash, 2-3 months or 2 or 3 years, that buy and hold is going to suffer for many, many years. So if it's risky to buy stocks, what do you do when the market's crashing? Once the market crashes, all aspects of the economy is slowed down. That's the time when you need to get your credit history, pay down your debts, get yourself in shape, get yourself educated, and get prepared to take advantage of the situation because there are going to be some bargains coming up. Take advantage of this situation. Paying off any debt you have, getting that credit score where a loan officer will give you some money, Money's going to get cheaper, and you could put it in real estate or the stock market or do it whatever rich people do. Prepare yourself to take advantage of the stock market crash, but don't be too anxious. You never know when the market will stop crashing. I know I've made this mistake a million times. I got greedy, wanted to get in, wanted to recoup my losses, and kept on buying as the market dropped until I was in trouble. I did this with silver futures, and I lost over $50,000 doing that. Kept on buying as the market was crashing, and then eventually the smart traders on the other side took me out. And that was with a retirement account that I really needed that money. It wasn't money that I was trading with that I didn't need. So several mistakes. You heard that cliche, don't trade with money you don't have or afraid to lose. Well, here's another one. Don't catch a falling knife. Wait, be patient. You'll be glad you did. So learning how to short these stocks for the short term is going to be very, very beneficial to you. I think we're going to have a pullback. I mean, the market cannot just keep on going up. And I believe that market is going to pull back at least going to be 10%. Now, I am optimistic for the decade. For the next 2 years, though, I don't have that optimism. I think our government and the economy and the world situation is going to all have effect in the next 2 years. So, short term, my bias is negative for the long term, short term for the next 2 years. After that, I think we're going to have a technological revolution. We're going to have autonomous cars, our medical practices, and technology is going to be leaps and bounds. I'm very optimistic for the decade. But learn how to short for the short term. And the other takeaway from this is prepare yourself to take advantage any eventual sell-off or short. And you can take advantage of it by preparing yourself, getting your credit scores. And once you have that you can have a loan to buy real estate, invest it back in stocks, or buy a business. Because I think a lot of business is going to fail. Or if anyone ever wanted to own a restaurant, there are going to be plenty for sale after the next 2 years. Again, the restaurant business has been really good in our area. And it's been really good in the Pennsylvania area, too. People stand in the lines. But I believe that in the next 18 months, 50 or 60% of those businesses that have lines out today will be out of business based on the labor and food costs and other factors that are going to occur to take them out. Prepare yourself for the sell-off and take advantage of it. The ones that are prepared the best will survive. Are you prepared? Are you educated? Can you do a short? If you're a beginner, perhaps maybe following my YouTube channel, although don't follow me this week because I have a negative bias and the market is going up. But follow the YouTube and learn from it. Follow some other YouTube channels. I have a free Discord chat. I have my settings out there in the description below. So let's get started. Happy trading. And by the way, don't take yourself too serious. Learn it. Take your time to learn it. Have fun. Swing trading is a lot of fun.